Owning a rental property isn't just about the monthly rent, it's about cash flow and return on investment. Understanding the difference can help you make smarter decisions and set realistic expectations. Cash flow is the money left over after all expenses are paid. This includes mortgage payments, property taxes, insurance, maintenance, repairs, management fees, and reserves. Positive cash flow means your property pays for itself and still generates income. Negative cash flow means you're covering the difference out of pocket. Return on investment, or ROI, looks at the bigger picture. It measures how efficiently your property is growing your wealth over time. ROI includes not only cash flow, but also appreciation, loan paydown, and tax advantages. A property may have modest cash flow, but still deliver strong long-term returns. The key is balance. Strong rental performance requires accurate pricing, controlled expenses, and strategic decision-making. Overpricing can increase vacancy. Underpricing can erode returns. Deferred maintenance can lead to larger expenses later. Every decision affects both cash flow and ROI. This is where professional management adds value. At Stokley Properties, we focus on maximizing income while protecting the asset. We help set competitive pricing, manage expenses responsibly, reduce vacancy, and provide clear reporting so owners understand how their property is truly performing. When you understand your numbers, you stay in control. When you ignore them, surprises follow. If you want consistent cash flow and strong long-term returns, it starts with informed management and disciplined execution. Stokley Properties, managing your property with performance in mind.